Let's now take a look at what would be different market profiles and how to operate them when I can expect X or Y profile. So let's see then what profiles we have. They are simply the market is either trending or the market is in a consolidation. It is ranging. It is doing seek and destroy, as they usually call it. It is doing barcode, however we want to see it. Those are the two market profiles we're going to have. And those are the two things that the price is doing. Either the price is distributing or the price is in a range. It's consolidating. That's all. No more market profile. That's what we are going to find, obviously, in trending markets. This doesn't mean it will look like this all the time. Sometimes there is a quick retracement, and there are many variations on the charts, but we identify a trending market as a market that constantly breaks the high, confirming a continuation with the body, and either makes a pullback or continues distributing. But if it makes a pullback, I would expect it to respect the area with a pattern, make a small consolidation, a lower time frame, and then give me another continuation. So I know the market is trending because of that, because I keep getting continuations. No matter which direction it's going at the moment, I'm getting strong distributions. I'm constantly breaking out of ranges. While when I'm in a range, it could be that the price made a structure, and at the moment it tries to continue. It rejects me. He comes and takes this low, tries to go here. He comes here again, goes up again. Now he makes another continuation attempt and keeps going and staying here, and another attempt fails, and here we are, basically in a range where the price can't distribute and can't make that continuation. These are the two market profiles we will encounter, and it's important to know how to act in each one so that we avoid losses from such a mechanical operation. So of course, those who come to new ADTFs, what they want to do is retrace to a previous area, 50% trade. Retrace to the previous area, 50% trade. Retrace to the previous area, 50% trade. But then the price reaches them and makes this profile, then the market takes out this high, and immediately they want to take the first trade here. Then they take this as a structural change because it removed the logo, so now they take the area to C and try to make a trade, and it might give it to them, but they get messed up right away. Also because the price is probably coming from a rejection and all this hype, and so then they get so used to this that this day comes and it becomes a bad day. So the idea is to be able to avoid this when I can wait for a profile like these or a trending profile I can find it after news, post news, after important news, because the market makes a decision. And the big players within the market operate quite a bit based on fundamentals, especially when we talk about Nasdaq, which is an index that gathers tech stocks. Therefore, those who operate stocks or those who make their positioning based on reports and everything about said stocks or the macroeconomic context of a country that may affect the performance of their stocks, all that influences said stocks in shares. It will generate sensationalism within the positioning of those who really have strong money in this. So many of those strong moves occur after important news. News like the inflation data, CPI, non-farm payrolls, NFP, OMC, which is when the interest rate to be set for the dollar is decided. After seeing how inflation is, decisions about the interest rate are made. Those are the main ones. We also have some that are not so significant. Obviously, when he spoke yesterday, Paul is also very important to see what the gentleman says, so we are not taken by surprise by a strong movement against us. After that, we have news like PMIs, and I don't know, there is a lot more news, but the ones we are most interested in are mainly these here. I hope I am not missing any very important ones at this moment. But well, the idea is this. After the news, I can have a fairly trending market, especially when the news meets an expectation that was held for the market. When else can I have a fairly trending market? When an area is broken. An important area that was jolting the price breaks with an order flow set like this. Let's suppose the price was coming bullish, and up here a reversal happens. A reversal happens. The price comes to the area and makes a double top tap and goes to look for something down there and gives another reversal up here. So the price will eventually get here to this area again. And as I anticipate a consolidated market, what can I expect here if the market wants to make an upward continuation now because it already touched something important here? It's going to face all the positioning that happened here, so it will probably get a consolidation, another strong pullback. And once it breaks that important area, is when it usually happens. Again, quite strong, quite trending movements usually happen. A quick pullback to an origin, and then yes, the continuation usually happens like that when an important area is finally broken. I'm not referring solely and exclusively to a movement in this direction, but to the way the structure is built, which means the pullbacks can also be strong. They can be quite strong, but that area breaks, And it usually happens when you can better identify a trending market, when imbalances are being filled, when the market has a fairly marked structure suddenly makes a move like this and touches something over here to the left and leaves us with all this imbalance zone, all this around here. You often see a quite trending market. Also, when the imbalance starts to fill, then the market gets here to a bullish zone. Around here, it consolidates, makes the double bottom tabby pattern, and starts to go fill the imbalance, sometimes without much pullback. And this is what they often call the B shape too. In other ways of operating, but whenever one of these imbalances starts to fill, you usually see a rather trending market, a market that doesn't give much pullback, a market that just generates intermediate structures and shifts them immediately and continuously. So, ways to anticipate trending markets, and also logically, if I know that 100% of the time I'm not in the same market profile. So if I come from several days of consolidation, if I come from several days of range consolidation, I should already be expecting that at some point this will break and start a strong distribution, either to manipulate that range, since here there is a range, either to take out one of its sides or simply to now make the strong breakout. But as long as it comes from a range over several days, I can already be expecting soon a trending market once it starts to exit that range. Now, when can I expect the market consolidated a range? By doing the exact opposite of this. That's simple. Awards before news. The same news before all the news. Sometimes even before Paul speaks. Sometimes even before the opening. You can also usually see then that maybe in London the market is making a good structure, and if we talk about Nasdaq, which depends so much on its New York opening, the market is already approaching the opening hour here. It's going to be the opening. Here it's going to be the opening. And suddenly the market starts to calm down until the opening arrives. And then it just shoots up. But this also usually happens before news, before an important opening, because there is uncertainty. Everyone is waiting for something to happen, where there will be volatility to start their positioning. We also had a significant breakout area here. So before the breakout of that significant area, what needs to be done? Fight with that significant area. And that's where the order flow fight happens. What do you mean by order flow fight? Let me draw it again. A structural change happens. Price moves around here, and what do I have? A source. And what do I have? A bullish order flow. So when the price through a bullish order flow faces a bearish origin, I might get some consolidation. That's when this fight starts between the orders left around here and the generating order flow. So it's a point where I really don't want to keep buying if I didn't buy from around here. From around here, it's where I least want to buy. Also, if I want to sell, I need to wait for a good confirmation again. Because sometimes what's being built here might simply be the future responsible for breaking this. Or maybe it will be the reversal, but it is one of the main points where consolidation usually happens the most, when an order flow in one direction faces an origin in the opposite direction. And this usually happens a lot when the Nasdaq has made historical highs. Try to identify each scenario of historical highs. Take the origin, I don't know, from 15 minutes, 1 hour, 5 minutes. Trace it all the way to the right and see what the price did before making the historical high when it reached that point. So this is one of the scenarios to identify and say, okay, it may start to consolidate here. When else could you identify a range? When I've had many days of distribution, the market isn't always in a straight line, nor will it always be the same, so predictable, nor will it go infinitely that way. Today is a perfect example then, that we brought from previous days quite a lot of distribution. If we look at the New York sessions, there were strong movements in one direction, distributions. Next session around here, there it is. Next session over here, the price strongly increases to strong price. The price strongly increases, strong price. Next session over here, the price drops strongly. Next session, what happens over here? Where did everything stay? New York in this little box. From here until the afternoon, session arrived, which is also very typical when the price tends to make a distribution in one session, in the next, it accumulates, and already in the other, it returns and distributes. This is already a little. This can be seen more in depth, knowing something about ICT, the topic of market profiles as well. But this is quite typical when everything accumulates all morning. This usually happens in the afternoon. That exit from that range so super strong. Then if I came from so many days of distribution, I can't expect the price to be doing the same thing all the time. And I can't let the price spoil me to that. Because then, if I see that the price over here did all this over here, it did all this, making all the movements, I will arrive with certain expectations for the other day, and I am going to condition my operation in such a way that I am going to want to make a move similar to what has been happening, and the price is going to take me out, take me out, take me out, take me out, take me out. If I am faced precisely with a market profile of those consolidations, then don't be so mechanical. Don't expect the price to be doing the same thing all the time, especially when these order changes start to happen. because the price was coming down around here. From where? From the origin of all-time highs. The price here took out all-time highs, made a structure change. It got here to 50%, and look how it starts to make a kind of range around here. It starts to consolidate a bit, which in a shorter time frame was still very trend-based, but from here it can be seen more as a range if we compare it to these types of moves, because it is facing a bullish order flow against the bearish origin, and the price starts like this until the structure changes again. From there it reached its 50, gave a continuation, then went back to 70 and to the origin of shorter time frame, and again continuation, and so on. So all the downward distributions meet an upward target, and it changes my structure. And that change in order flow is already happening. There have already been many distributions, so I can expect the price to start doing this at some point. And especially this coming week, when NFP on Friday is also coming. Well, in fact, right now, I missed the news. Posting unemployment claims here. It usually causes some movement too. This news usually causes some movement too. So, if I know that I have a week where this news is pending, what can I expect in the days leading up to it, even though we have good volatility? There may be some consolidation, there may be movements that are contrary to the direction the news will actually take, because that's how the big players position themselves. Injecting fear in one direction, making people start to be induced to go in that direction, so that when the news comes out, it liquidates everything, and then take the expected direction. This is how to identify a possible range or a possible trending market, by looking at key indicators and market behavior. Now, how am I going to want to act in such market profiles? Well, in a trending market, it's as simple as waiting for a pullback to my previous area, either from its origin or from 50%. Thanks. Most of the time, those two, I'll wait for the flip to come around here. The change of structure in the lower time frame that creates the flip, then I'll be able to enter again, aiming for this as a target, and my stop loss will be at the low of the flip. The function of that flip is to save us all this stop loss space down to this low. So, our system helps to refine an input in such a way that we don't have to protect ourselves with all these stop losses, but rather have a smaller stop while maintaining the same target for the higher time frame. So in a trending market, you'll notice a lot that everything that forms a pattern in the direction of that order flow starts to work, be it a flip, a rejection. If the price got here, was going down, takes a low, comes and makes a high, then if it takes the low again, but with a wick. This usually works quite well waiting for something to get suited, and then there's a rejection. It usually works quite well when the market is very trending. For example, at all-time highs, when the price tends to go on a runner that barely gives pullbacks. It's something that tends to happen. The price leaves imbalances here and there until it reaches a point where it starts to consolidate a bit. Here, it starts to consolidate a bit. And what it does is come and suit this low, touch the imbalance. So, it is doing two things at the same time. It is rejecting and touching an imbalance. And almost everything in the direction of that trend tends to work when the market is running like this. So, every bullish flip that the price makes from an imbalance or a previous area that it touches is what we are going to be looking for. For imbalances, it is not so necessary to use them. If you are new to DTFX and don't understand anything about ICT, it is best to stick only to the concepts of structure, areas, and all that. For imbalances and divergences, it is necessary to have some experience in ICT to know when to use them, since ICT relies heavily on identifying when its models will distribute or when it is the right time to apply them. So trending market, 30% more is a pretty effective, irresponsible 50% of the swing area. We expect a pretty effective click. All of this will be quite effective in our favor in a trending market. The responsible one, the 50%, the 30% if it is in confluence with the responsible one. We'll wait for a flip to go there. Now, a more consolidated market. I want to avoid relying on the responsibles to take trades from them. Instead, I will use them more for order flow, but I will explain that thoroughly in the order flow class, which is later. However, I don't want to be seeking so many trades from the responsible, but rather that the price is moving from origin to origin. And if I have an area here and an area there, so ideally, what would happen is that the price takes out these highs of the range or these lows of the range, and I look for a tap to the area and a retracement to the range. Then sweep tap to this area and retracement to the range. Those are the ways to operate in this type of consolidated market. I will mandatorily wait for a sweep close to the origin in one of the two directions. Ideally, it would be to build a top-down analysis, to have a narrative, an idea of what the most favorable direction is, and start looking for that. So, if it turns out that I am bullish in the higher time frame, what am I going to look for? Switch from the lows, rejections, and look for longs, right? But I don't want to look for longs from where? I don't want to look for longs from when the price comes here, enter a long here. And the same in the opposite case. If the price is that it gives me a response from breaking this low, I don't want to look for a short from here. That the price is going from origin to origin. So it may follow the move later, but after it came and swept this and reached an origin, and then it did go. So in range markets, it's not as necessary to wait for a flip, but rather by the rejection, seeing that the price closes within, and then there will be certain particularities in the candles that I will explain in another session later on that are useful for entering in a more aggressive way. A certain range that the candle creates when it sweeps starts to act as a consolidation, and then it reverses or closes above the previous bearish candle that took out the low. That also works quite well. Or placing a buy stop a buy stop order at the high of that bearish candle that took out the low. So we place a buy stop here. And while the rejection price action and everything is also usually a way to enter, it's a more aggressive approach required in this market profile. But all we want to know is that we are not going to trade it the same way. We are not going to want to be so rushed in the movements. We are not going to want to take orders from the middle of the range. We don't want to sell or buy in the middle of the range, because the price is moving from origin to origin. So origin to origin, 70% is usually very effective, especially if it's in confluence with an origin, an area that remained unmitigated. Which is another way to know what things the price is going to swipe in the intermediate stage. If the price is climbing up strongly here and here, I ended up with an unmitigated area. I can expect the price to swipe this and swipe this, finally touching that area that remained unmitigated a while ago. Alright, so that's another way to start getting an idea of what the price is going to do, from where I can start making a mental setup as the price heads in that direction. So these are the market profiles we're going to have, the effectiveness of the levels within them, and what areas we'll be looking at later on with all the reviews. I hope you can see it in the actual market, with candles and everything, so it becomes easier for you to gather visual data, and thus understand well. See here, that after the range was broken, and the area that was holding the price was broken, which was this structural change in Asia to the downside. Notice that once the market breaks, it becomes super trend driven, making a super strong upward move, then a very strong downward move, and a strong downward move that returns to the range we have here. The range is practically constituted by this entire candle. Notice that it is the lowest point between this high and our new high. So look how it didn't pick up anything internally. No something from the back. What's behind? Forget it completely. If you have high points here and low points there, everything behind that, discard it immediately. That doesn't matter. What matters is the highest point here and the lowest point. And look at what the price did. He then reached the person in charge. And to 30%, because it has now become a trending market once the area that was holding the price broke. Alright, so look how beautiful it is.